So welcome back everybody, I hope we're all doing well. Today I'm bringing you a brand new case study video. So this comes out maybe every other Monday. We have no set schedule for this, but when we have free time I really do like to jump into the market, pick a pair, pick a market itself and do a full rundown to show you what I'm seeing, shorter, medium and longer term. I know a lot of you guys have been enjoying these case studies so far. They've been some of the popular videos on the channels. I think people enjoy seeing somebody else run through that market, see what they're looking at so that they can compare their own analysis, see if the biases are the same, if they're different, maybe take little things from the analysis to implement in their own. A quick disclaimer before we dive straight into anything though is that this is not financial advice. This is simply my opinion on what the market and the price data is telling me through the use of my own strategy that I have spent a lot of time practicing on a demo account, making sure that it is profitable before bringing to the live market. So I suggest everybody does the same thing. So jumping straight into it, the first thing that I wanted to run through is the main thing that we do from a top down is we start on that higher time frame. So I'm on that weekly time frame as of current. We see that price has had this major move down. This is from our COVID lows. When COVID was really introduced into the world, we know that a lot of people pulled money out, pulled investments out of such markets like the UK100, and in turn the effect that that had was of course a massive bearish run down. So after this heavy move down, we broke this low in the market. Once we break a low, so break that major structural point, that major low in the market, that is a great confirmation tool of bearishness moving forward. Of course, we are on that weekly time frame. So after we break this structure, the parameters that we're therefore looking at is this is a protected high all the way at the top. So that high set in the market would become that protected high after bearishness is confirmed. So the second we have this break of structure, what that says to me is that we can start to look as this high as a protected high, and then as our lows as our final target. So in the long run, we want price to eventually trade back down to mitigate some of the positions from that move down in that bearish run. Now, I don't actually believe that unless we have a great economical event to catalyze such movement that we will ever return to those COVID lows in the foreseeable future. So therefore, I've identified another area which is much more likely to be fulfilled, which is this area down here, this 1 day demand zone. So that is that heavy sell-off before the major rally began. So the reason this holds importance, because if anybody's watched these videos or seen my style of trading before, you'll know exactly how I go about identifying these points of interest. So before we had that major move down in this region here, we just use that brush tool. In this region here, there's a lot of equal lows. Now, what that says is that it's an area where there is concentrated stop losses. Now, the smart money operators, the tools that they have available to them is to be able to see in the market where the most concentrated areas of stop losses lie. Where does that liquidity lie? So on their markets, there'll be lines, boxes around this area that says to them, there is a lot of liquidity that lies here. Now, before they make that move up, they're going to want to bring price past and through that level to clear that liquidity, remove any positions that are opposing on the move that they want, and then they will make that move happen. So the reason why I've highlighted this sell candle is because this is the sell candle that was responsible for clearing that liquidity. So this candle right here is the move that made price push through those lows, and it's no easy task doing so because once it gets to that region of the lows, a lot of demand is going to be introduced as people look to buy. And as a result, there's going to be a lot of confluence in price direction. In order to push price past and through this liquidity point, the smart money operators have to open large sell positions in order to push price past without too much resistance. So in that process, that is where we have those unmitigated positions left open. So we want price to eventually trade back down, tap into that zone, unmitigate the positions, and then carry on in its given direction. So that is the longer term bias. So using this weekly, I've decided exactly what I want price to do from now. In confluence to that, of course, this is that major supply zone that I had identified. This was identified on the daily as well. So when I drop down, I'll show you exactly why and how I have identified that zone. But for now, just understanding that to me, this was the most relevant supply zone in this push down. And we've been watching this area for a very, very long time, since the start of the year really, since this consolidation started, which was April-ish, April time. So from that point, we've been waiting to see that major manipulation of this area, but we'll dive into that as we drop to the lower time frames, just knowing for now that, as I said, we highlighted this supply zone. Price has just tapped back into that zone, potentially mitigating it and giving us that sign that we're ready for that reversal, and that reversal hopefully taking us down longer term to this demand zone. Okay, so just some reasoning now behind why I identified this supply zone. It's just because it's that major buy before the heavy sell-off began. It's that last buy candle on the daily time frame before the heavy sell-off began. Now, I could have identified this entire area. So on the weekly time frame, this move up from the 724 to the 756 area, that was our entire move up, but it's a very unrefined zone, which is too large of an area for me to try and look for sell positions from. So I just went down to the daily and refined it like this. Okay, so now we're diving into price as of current. So as I was saying before, this is where price has just traded up and tapped into that supply zone before finding enough supply to then reverse. So the main things I want to point out here, again, another major area of liquidity. The reason why this has so much more importance than our typical areas of liquidity is because from May all the way through until October, we were bouncing off this level. We were constantly setting equal highs. If they weren't equal, they were still within a set range. And what that's doing is it's making a lot of people believe that price cannot push past this level. A lot of people are getting ready or already initiating those sell positions to try and ride price down, given the fact that a lot of suppliers entered the market at this point. Now, once again, as I was saying, those institutional people, your smart money operators, they will know, they will have something like this indicating to them that a lot of liquidity lies here. So in my eyes, before we could make that reversal, we had to have a major push through this area, clearing that liquidity before any move lower could really happen. So that is even more confluence to this supply zone to hold, because we knew that we wanted price to break these highs, and if it's going to do so, it may as well fulfill that supply zone at the same time. So if anybody has been a follower of our channel for a while, you'll remember that I was watching an area in here as a reaccumulation. So what I was expecting, I thought it may have hesitancy again to really push through this zone, and if so, I was actually expecting the movement to trade up, come back down, find demand in this area, and that area giving price enough demand to then blow through and mitigate. Of course, we didn't have that happen. Price isn't always going to do what we think. Our analysis isn't always going to be 100% correct, but it was still valid at the time and still a valid prediction. End of the day, price has still done what we were wanting it to longer term. It's broken that liquidity, traded up, and has now started to break down. Now, although I have this region identified, I don't think it'd be wise as of now for price to find too much demand here. Of course, it has reacted off this point because it does still represent a demand zone, but I don't think it's enough to actually reverse or invalidate this downtrend we have since created. All I think it's going to do is give price enough demand to trade up into this supply zone and then make that move lower. Anybody looking at this longer term, it can be argued that until we break this downside liquidity point, so these lows at the bottom, we haven't got full validation of a bearish run longer term. So if anybody wants to be cautious, we could wait for this area here to be broken, then look for the sells. But to me, because we can complement this move, this reversal, with that point of interest, with the liquidity grab and the supply zone mitigation, to me that's enough confluence, as I said, that price is now ready to break down. For me, I'm going to be looking for sales from this region. It's about 7210 up to 7310. That's quite a large range, but just looking in that area for entry confirmation through the use of Wyckoff schematics or through your fractal structure. But as I said, the second price does eventually trade down, invalidate this area, invalidate what was the once bullish run. We haven't got full confirmation of bearishness, but to me it's enough. So this is just a great example of how we can create arbitrary situations to try and trade from. So even though price was bearish here, you could argue, okay, the trend is your friend, I want to be on the same side as the trend, which is definitely a brilliant thing to live by, just because it gives you that extra confidence that you are on the right side of the market. But as you become more confident in your trading, a more evolved trader, you can then actually look to trade both sides of the market, which is exactly what we could have done here. Now, this zone has been drawn out for me since the start of October. So that's around 2 months now that this zone has been drawn out. And it has eventually come to tap that, and I could have looked to be a buyer from this. I'm going to drop down to the lower time frames in just a second to see how price reacted here, to see if there was confirmation for us to be a buyer. But the point I'm trying to get across is that even though we're in that downtrend and longer term, we're looking to be a seller, that doesn't mean we have to completely disregard any position that may go against that, given that we are delivered our 3-step process. So we already have an impulsive wave upwards. We've identified our point of interest. So let's see if we were delivered entry confirmation. Okay, so looking at this here, this is where price did come down and tap into that demand zone I was talking about. Now, the thing with accumulations is they can be very hard to identify in the market, but you just have to remember again what I was saying. It's the stopping power of the downtrend. So right here, all of this wiki rejection, that is showing that hesitancy for the downtrend to continue. So if we really start to think about what this is, to me, we have a selling climax down here. This is where we have very climactic price action. Even though this bearish trend was in full control beforehand, the second we reached this level, volume and spread diminished, and we started to introduce a lot of demand. We come straight back up for an automatic rally. So that is showing proof that demand has entered the market, because we have a big high volume retracement straight back up after that selling climax has occurred. We then have some secondary tests within this area where price is retesting that level of demand. And now that it's proving to us that demand has definitely entered the market, we've again created some liquidity in this area. People have seen this as a reversal and are looking to try and buy into the market. We have that major push down then to clear those people out before we start that move upwards. So typically within an accumulation, we can expect price to come and mitigate the movement that caused the spring. So if you remember, as I said before, for price to clear liquidity and push past a major level of support, resistance, supply, demand, it's going to require institutional control. So to me, this is that major last move down to create the spring. So this being our spring, this move past and through the liquidity point. So we could try and look for buys as price trades into this area. We can, of course, try to refine that zone. It is no guarantee that price will come to mitigate the spring. It all depends on how much demand we have in the market. If there is too much demand in the market, price is going to struggle making that move lower to come and mitigate this. On top of that, because we know that longer term, we want to be a seller in the market and that price is producing bearish price action, bearish structure, they may not want to mitigate this position before the move up, because they know that once they do move up slightly and touch that supply zone we had drawn out, price is going to then make that next impulse, which will come and surpass this level anyway. So they have no real desire to mitigate the areas, because they know that within a week, let's say, price is going to be back down at this region anyway. So this is just a potential entry point. You know, price could come. It's not a definite, but price may come to mitigate these areas this spring, this last down move before the heavy rally. Just keep your eyes on it. I will be setting an alert right at the top of this zone. So I've just set an alert here at the top of the zone. We'll just wait to see if price trades back down into it. If so, we can potentially then look to be a buyer into the market. And then where are we trying to take that buy up to? So yeah, now that we zoom out again, you can see this supply zone, the one that I keep referencing back to. That is that last major up move before this heavy sell-off began. And then as we've traded in, of course, we found that accumulation, we found the reason why buys could have been valid from this area. And then as prices traded back up, we've given ourselves another situation where we can be on both sides of the markets. So if price was to actually trade back down and mitigate that spring in that accumulation, we could then look to be a buyer in the market, trying to buy price up into this region, which would provide us, for example, with a nice 4-to-1 trade there, having that stop loss just below that low, and then having that take profit up at that supply zone. That is an example of how I would look to trade it. You, of course, should look for your own entry confirmation and look to set your own parameters on that trade, pursuant of the strategy that you follow. And then from there, if we do manage to get in on a buy, if not, we're then looking to be a seller from this region. Again, set an alert here at that 7-2-10 region, wait for price to notify you and trade in, and then use whatever step you have within entry confirmation. So for me, I'll be looking for a Y coffee and distribution, whatever entry confirmation you may use in your strategy, just to ensure that the trade would be valid, whether that be candlestick formations, fractal structure, Wyckoff, take your pick, whatever follows your strategy, make the use of it. But that now is my medium term trade, the sell from here, and this is my short term trade, the buy from here. So that is going to conclude this case study on the UK100 pair. I hope you've all enjoyed this video. I hope the analysis that I've run through is familiar to you, or you've managed to learn something from it. I try to explain everything that I analyze and look for in the market to the best of my ability, so you understand exactly why it is that I analyze the market the way I have. Of course, if you have any questions about anything I've run through, leave them in the comments and we will get back to you ASAP. But as for now, as I said, I hope you enjoyed. If so, leave a like and we'll see you in the next video.